let's talk about assumable loans. And what is assumable loan? An assumable loan, VA, FHA, I never really see conventional. You're assuming the loan from somebody. Now, I'm not going to get into detail with VA. I'll do a separate video on that. I'll use an example, and I'm going to go over the pros and cons to this. Let's just say, hypothetically, somebody owes $50,000 and they want $100,000 and they have a low interest rate. You can either do two things. You can just buy the house normal at the going interest rate now, putting down 3%, 5%, whatever the case may be, or you can assume their loan, which means you take over their loan at the interest rate that they have, and you pay them the difference. So let's go over the pros and cons to this, because nobody talks about this, and it drives me nuts. Because if you look on Zillow and you look at a lot of different marketing things, people will be like, assumable loan at 2.5%, assumable loan. Great. But what you're not telling me is what's the difference, the gap that I have to pay. And I'll go over that. So what happens when you assume a loan is this. You, the seller, have to ask your bank, is my loan assumable? And if they say yes, then the buyer that wants to purchase your home has to use your bank, not their own lender, nothing else, just their bank. And sometimes this can take a little while. There's reasons behind it, maybe because some people don't really get paid a lot of money, but it could take a while for the assumable loan to go through. So always understand it might not be a quick 30-day close. Okay, so what's the pros of an assumable loan? The pros are that you can assume someone's low interest rate, which means you're taking on their low mortgage payment, and you're getting it for a drastic difference of what normally the going rate is. So if the rate is at 6 or 7% today, and you can assume a 2.5%, that's phenomenal. Even 3%, that's phenomenal if you can get it. Especially if you can get it for a cheap price or equal to putting 20% down. Because remember, if you're putting 20% down on a normal loan, which usually with FHA and VA you're not, but if you are, then you're getting it for a phenomenal deal. So what do I mean by the gap and what's the negative? All right, because I see this a lot, and this is what I want to talk about. So work with me here. I'm going to slow it down so you guys understand. Let's say I owe $200,000 on my house, and I have a 2.5 interest rate, a phenomenal low interest rate, and I have only $200,000 left in my principal. But I want $400,000 for my house. I feel that that's the appropriate market value on my home. As a seller, I could put my home on the open market at $400,000, and you can come buy it. You can do a normal loan if you want. You can get whatever you want to do, conventional, VA, FHA, whatever it is. And you can put down the minimum amount, and you can get the interest rate at, let's just say it's 7% today. And you can go on your day, right? Now, let's just say, for instance, I'm a FHA seller, because I'm going to go over this twice. If I'm an FHA seller, you then also have the choice to assume my FHA loan at 2.5%, but you can't put down your 3%, 5%. You have to come up with the difference of $200,000. I've seen this before, right? Or let's just say, for instance, I owe $300,000 and I want $400,000. You, the buyer, have to come up with the difference of money of what I owe and what I want. So you basically then have to say, okay, instead of 5% at $12,000 or at 20%, I have to give you $100,000 or $200,000 to make up the difference. So where the pros and cons come in, the cons are sometimes you're paying, there's a threshold of how much you should be paying, to the point where you should either get the rest and pay for it cash, to be honest with you, or hold that money as an emergency fund. Because I'm going to get a little, I don't want to sidetrack here with my ADHD. Do you know how many people, I can tell you right now, have assumed the loan and put down a ton of money. And the value of their homes have already went down a little bit. So they're losing a huge, I don't mind losing a little bit of money here and there. I own properties, and if the market comes down, it is what it is. I wait it out. It's a longevity game. But you're playing with a ton of money at that point. If an emergency happens, if God forbid something happens, you have to do the math behind it. Does it make sense to put down or gap that money for that interest rate in the savings you're making? It's all about savings and time length, right? So it's like, if I'm saving $1,000 a month and blah, 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 you have to look at real estate as the value of the money that you're putting into something versus the value of time, right? I can do a separate video on that. So remember, if it's FHA seller, then you have to assume that FHA loan. Now, if it's a VA seller, then only VA buyers can assume that loan, because VA does assumable loans. But remember, for a separate video, if you're a seller with VA, it is still attached to you. The X amount of dollars left is still attached to you. Completely separate video, because I don't want to do a 20-minute video on this. So we'll just go over this one more time. The pros to an assumable loan is that if you can get it cheap enough within the gap, like I owe $200,000, but I want $250, might be worth it, right? You pay me the difference, you get that phenomenal interest rate, especially if it's 3 to 4 points below market. The cons are if you're paying like 50, 60%, which to me doesn't make sense to assume that interest rate, right? I'm going to get a lender involved to talk about how it works with closing costs and everything else, but I just love doing these videos. I just think a lot of times when I'm looking at people doing marketing and marketing for these homes, they're not explaining anything to anyone at all. They're just like, oh, assumable loan, blah, blah, blah. And half the agents don't even understand real estate education anyway. So remember, look, we do this all the time. We have over 900 transactions. I try to do videos with pros and cons. I try to show videos on different, you can look at it different views. I don't edit anything. I don't do any special pop-ups or anything. I just give it to you straight. I love the feedback I've been getting. I get a lot of people that write to me saying, because I don't just put this on YouTube. I put my videos everywhere. I do a lot of short reels and everything else. So I love the comments and the positivity, and anything else you guys want to learn, I'm here. I'm going to teach it every single day, everyday education.